Welcome back to the CryptoWorld channel, everyone. My name is Josh, and in recent hours, we've seen a pump across the crypto market due to the new inflation numbers coming in underneath expectations. But is this short-term pump over, or does it still have some room to the upside? And in just a moment, I'm going to be talking more about that alongside inflation numbers, interest rate hike probabilities, and so much more later in the video. So make sure you watch to the end. First of all, we need to talk about inflation because today, of course, we got new CPI numbers, and this is now updated the CPI inflation rate in the US, and it's actually dropped down to 8.5% year over year. And this actually came in under expectations because if you watched my last video that I posted yesterday on the channel, I said that the majority is expecting in between 8.7% and 9.1%, and really no one was expecting inflation to go higher than 9.1% with this new CPI data, due to things like the massive drop in commodity prices that we saw throughout July. But anyway, as I explained yesterday in more detail, I said if this number comes in underneath 8.7%, then expect an immediate pump in markets. And that's pretty much exactly what we saw. The moment this number got released, within minutes, we started to see a pump across crypto markets and the stock market. And if you're wondering why lower than expected inflation numbers is bullish for markets and why higher than expected inflation numbers could be bearish for markets, then check out my last video because in that video I explained all of that in more detail. And now that we have these new inflation figures, if we take a look at what the futures market is currently pricing in for the probabilities of future rate hikes, and just to simply explain what this actually means for the new viewers on the channel, because this is actually extremely important to understand. And so basically when I say a rate hike, that means a raise in the federal funds rate, and pretty much when this is happening, that is bearish for markets. But when the opposite happens, when we see the federal funds rate go back down, that is bullish for markets. Those are rate cuts. And at each of the Fed meetings, the Federal Reserve, or more technically, the Federal Open Market Committee, the FOMC, votes to either increase the federal funds rate, decrease the federal funds rate, or keep it the same. And as of right now, the official federal funds target rate is set at in between 2.25% and 2.5%, but the majority just look at the higher figure, the 2.5% figure. And going back to what the futures market is currently pricing in with these futures contracts, at the next Fed meeting, which occurs in 41 days from now, so next month, there's currently a 58.5% chance of a 50 basis point hike, which means raising the federal funds rate by 0.5%. And there's a 41.5% chance of another 75 basis point hike, which means raising the federal funds rate by 0.75%. And below that Fed meeting, we can see all of the probabilities for future Fed meetings over the next 1 year or so. And obviously, the further we look out into the future, the more the probabilities are stretched out. But basically, if you're going off what the majority is currently pricing into the market right now, at the time of recording this video, we're currently most likely to see a 50 basis point hike at the next Fed meeting. And if that happens, then we're likely to see another 50 basis point hike occur in the November Fed meeting. And after that, it's possible we could see another 25 basis point hike in the December Fed meeting, but that is it. According to what the majority is currently pricing in, we are not set to see any rate hikes going into 2023. That is right. We could see rate hikes completely stop by the end of this year at the last Fed meeting this year. And following what the majority is currently expecting in future Fed meetings going into 2023, the majority is expecting the federal funds rate to top out and plateau for around half a year at 3.75% or 375 basis points. And then once again, following what the majority is currently pricing in, we could end up seeing our first rate cut somewhere around the middle of next year, the middle of 2023. And this whole turnaround from a rate hike cycle to a rate cut cycle is most known as a Fed U-turn or a Fed pivot, and a Fed pivot that goes from either plateaued rate to cutting rate, or a Fed pivot that goes from hiking rate to cutting rate. Those are bullish Fed pivots. Because once again, hiking rate is bearish, but if you're switching that around to going to cutting rates, then that is a bullish pivot on the Fed's end. And the last two times the Federal Reserve had a bullish Fed pivot was at the bottom of the March 2020 crash, where the Federal Reserve moved their federal funds rate from plateaued rates to massively cutting their federal funds rates. And once again, that bullish Fed pivot marked the bottom of the March 2020 crash. And before that, we saw the Federal Reserve go from a rate hike cycle to a rate cut cycle. And when they last made that bullish pivot, that marked the bottom of the 2018 bear market for crypto and stocks. And you can see this more clearly if you simply look at the federal funds rate chart right here. This just shows the last 5 years of history, and as you can see, in early 2020, we saw the federal funds rate go from a plateau to a massive cut in around March 2020, which marked the bottom for the market at that time. And before that, perhaps more of a significant U-turn was towards the end of 2018, entering into early 2019, where the Fed went from a rate hike cycle into plateauing rate and then a rate cut cycle. And when that happened, once again, that marked the bottom of the 2018 bear market, and that is not by coincidence. Because in case you don't already know, the Federal Reserve is an entity that has influence over the markets, but not to the tune of millions of dollars or even billions of dollars. We're talking about trillions of dollars of influence the Federal Reserve has over markets. So if you think wealthy individuals, also known as whales, or institutions can move prices in markets, then the Federal Reserve is in a whole other league. And so that's why it's so important to watch out for this potential Fed pivot, because basically once that's completed, once the Federal Reserve is starting to cut interest rates, then at that point, according to history, it's almost guaranteed that the bottom of the market is already in. But obviously, as of right now, we are not seeing rate cuts. We still have a few more rate hikes to go. But because markets like the stock market and crypto are forward-looking, over the past 1 to 2 months since that June low, we've already started to see markets start to price in this Fed U-turn in anticipation. And so basically, if this Fed U-turn plays out how it's currently expected, or very close to how it's expected, then the bottom for stocks and crypto could already be in if this plays out as it's currently priced in. But obviously, if other variables change, such as inflation, if inflation suddenly gets worse again, then that could push this bullish Fed pivot further into 2023, basically delay the bullish Fed pivot and perhaps throw in a few more rate hikes if inflation gets worse. And basically, it's in that scenario where we could see new lows for crypto and stocks. But a lot of that really depends on inflation and the Federal Reserve. But anyway, getting into the Bitcoin part of this video, this right here is the daily Bitcoin chart, and technically speaking, we still have an active bearish divergence in play. This hasn't actually been invalidated, but at the same time, as of recording this video, the daily Bitcoin RSI is still currently holding above this ascending line of support. This hasn't yet been broken. So as of right now, when it comes to the daily time frame, this hasn't really changed over the past few days, because technically speaking, due to the fact that the daily Bitcoin RSI is still in this uptrend, and the Bitcoin price itself is still in this higher low, higher high price structure, which hasn't yet confirmed a reversal. But this bearish divergence is simply reducing the bullish momentum for this bullish trend. So once again, we're still technically within this bullish trend. We haven't confirmed a bearish reversal, but the bullish momentum is reduced due to this bearish divergence. And then eventually, when the daily Bitcoin RSI either breaks above this resistance or below support, that would give us further confirmation for the next leg in the Bitcoin price. But for now, it's just a waiting game to wait and see what line breaks first. And if you zoom into the 12-hour Bitcoin chart right here, we can see that we saw a last-minute bounce from this ascending line of support, which is sitting at around 23.1k. So those good CPI numbers really saved us here, at least for now, just in the shorter term. But technically speaking, a rising wedge pattern is still more of a bearish pattern, which means it is statistically more likely to break to the downside. And on top of that, nothing has really changed over the past few days. When you're looking at the 12-hour Bitcoin MACD, we're still seeing reduced bullish momentum throughout this uptrend, especially towards the later half of this uptrend. And so this, just like the bearish divergence on the daily time frame, is simply a sign of a weakness in this uptrend, meaning that we have reduced bullish momentum once again, and could potentially result in a breakdown, but that hasn't actually been confirmed just yet. And it is important to understand the difference between the 12-hour, the daily, and shorter term time frames, such as the 4-hour chart, because just as an example, let's just say the daily time frame could start to look more bearish, while the 4-hour time frame in an example might look more bullish. And obviously that isn't a contradiction, because when you're looking at smaller time frames like the 4-hour chart, you're talking about the shorter term, as in what's potentially due to happen in the coming hours or days. Whereas if you're looking at the daily time frame, you're talking about what's potentially coming over the next few weeks, maybe even over the next few months. But anyway, zooming into the shorter term, taking a look at the 4-hour Bitcoin chart, and right now, technically speaking, we're looking more neutral, if anything else, when you're looking at this overall trend. We're not exactly looking overly bullish or bearish, despite the recent short-term pump in the Bitcoin price due to those good CPI numbers. And the resistance for this choppy sideways price range is coming into play at around 24,500. But if you want more of a flexible range of resistance rather than a particular price, then this range of resistance is really coming in between around 24.2k and around 24.6k. So at least in the shorter term, there's quite a lot of selling pressure at those higher prices, but the buying pressure is coming into play in this region in between around 22.7k and around 22.4k. And once again, for as long as the Bitcoin price is trading in between this resistance and this support, we're simply looking neutral in this choppy sideways price range, which is really a profitable time for a grid bot. And if you have no idea what a grid bot is, I made a separate video on the channel around a month ago explaining exactly what that is and how it can make you money in a choppy sideways price range. And if you stick around towards the end of this video, I will link that other video at the end of this video. But anyway, getting into the Ethereum part of this video, this right here is the daily Ethereum chart, and technically speaking, the price of Ethereum on this time frame is still currently forming a bearish divergence, because obviously the price of Ethereum is making higher highs while the RSI on the daily time frame is making lower highs. And in order for this to be invalidated, we need to see a higher high form in the daily Ethereum RSI alongside the price action, because otherwise, if the price is sitting in higher highs while the RSI is still sitting in lower highs, technically that is still a bearish divergence. And now, once again, I want to make this clear that this is on the daily time frame, which once again tells us what could happen over the next few weeks and months, not what could happen over the next few hours or days. Because obviously, when you zoomed out on the daily time frame like this, we're looking at the larger price movements here, not those short-term movements that last over a few hours or days. And for the long-term viewers on this channel who keep hearing me say that, I'm sorry, but I have to keep making that clear, because otherwise, if I don't explain the difference between the different time frames, then there's still some people out there who take the daily time frame as a short-term signal, which is obviously not the case, because like we saw back at the all-time high for Ethereum, while this bearish divergence was forming, we saw multiple short-term pumps over and over for a couple weeks actually, before then we started to see this bearish divergence play out in a larger move that lasted over multiple months. And so it is important to understand that this does not prevent short-term bullish price action, because this is looking at the larger moves in the market. And a larger signal on the daily time frame that has coincided with these previous bearish divergences is a massive exit from Ethereum long positions. We're talking about hundreds of millions of dollars flowing out of long positions on each of these examples. And actually at that example at the all-time high, we saw over $1 billion worth of long positions close. And if you've been watching my videos over the past few days, you would already know about this right here. And so just quickly updating you on these Ethereum long positions over the past couple of days, they haven't really changed after that massive closure. But once again, this is not a short-term signal for Ethereum, because for example, what we saw back in the second half of March this year was a lot of money, hundreds of millions of dollars flowing out of Ethereum long positions. But if you're looking at the exact day that those Ethereum long positions stopped going down, that was right here. And as you can see, we still had another 1.5 weeks approximately of upside price action before then the price of Ethereum started to roll over. And also, it's important to mention that I'm not saying we're going to see exactly this happen all over again, because obviously a move of that size would put us into new lower lows. And like I said earlier in the video, it's unlikely that would happen unless fundamental factors outside of the chart, such as inflation, gets a lot worse. But for now, based on current expectations and what the futures market is currently pricing in, it's unlikely we'll break below that previous low unless those fundamental factors get worse once again. But if you zoom into the shorter term, taking a look at the 4-hour Ethereum chart, technically speaking, we're looking more bullish than bearish, obviously, because we're forming higher highs and higher lows, which means the trend is obviously more bullish than bearish. But if you're looking at the 4-hour Ethereum price oscillators at the moment, they're looking relatively neutral, because for example, the 4-hour Ethereum RSI isn't exactly in higher lows or higher highs. In fact, as of right now, the 4-hour Ethereum RSI is currently sitting in a lower high, while the price is in a higher high, which is technically a shorter term bearish divergence. But this hasn't yet been confirmed because we haven't confirmed the local high just yet. And so even though that could be something to watch out for in the short term, because it hasn't been confirmed just yet, we're still looking slightly more bullish than bearish, because we have seen a bullish cross in the 4-hour Ethereum MACD. But with that being said, I'll be watching the bullish momentum within the histogram within the MACD indicator, because the last couple of bullish crosses in this indicator have lacked the short-term bullish momentum. So these recent bullish moves haven't been as strong as these other bullish moves, for example. And the point of control for Ethereum in the short term is sitting at around 1660, meaning that if the price is above that level, then the bulls are in control. We're looking more bullish than bearish. But due to the fact that this has already been confirmed confirmed as short-term support, and previously it was strong resistance, strong support, and strong resistance even back here, which means if we lose this short-term significant price level, then in that case, below 1660, the bears would be back in control in the short term. But for now, because the price is still above this level, in the immediate short term, Ethereum is looking more bullish than bearish in terms of the trends. But if the RSI starts getting too close to overbought territories, then we could be due for a bit of a cool-off within this bullish trend. So something like this, for example, where obviously we're still remaining in this bullish trend, but we just had an immediate short-term cool-off and then resumed the trend. And if you want to maximize your profits in crypto, if the price is going either up, down, or chopping around sideways, then check out these videos popping up right here on your screen. The video in the top left shows you how to make money if the price is going either up or down, and the video in the bottom left is that video I talked about earlier in the video, where it shows you a simple yet effective strategy to make profits in choppy sideways price action. But anyway, that's everything that I have to say for today. I really hope you enjoyed, and I'll see you all in the next video.